Now, following the improvement in system liquidity, sentiment were updates in the treasury bill space, with 81% of bills that traded yesterday actually recorded yield contraction. On average, instruments across the intermediate end of the curve attracted the most interest. Healthy demand were also recorded across both the short and long maturities in the markets. Ayodeji Ebo is a senior associate investment banking at Afrinvest. He joins me now in Lagos as he talks about how the fixed income market fared yesterday. Good morning, Ayo.
Yeah, good morning, Bolaji. Thanks for having me.
Thank you for your time. Now, we're seeing improved liquidity in the fixed income markets. Now, this is evident in the treasuries and also in the bonds. What is driving this?
Yes, if you look at the current yield level, it's very attractive. And when you look at the other alternative asset classes, where you're looking at equities, is for now still has its own inherent risk based on the economic fundamentals. So with current yield, you continue to attract investors' interest. And that was what led to the contraction we saw in yields yesterday, especially at the shorter term of the curve. Based on even available liquidity in the system, which still closed at credit balance yesterday about 22 billion. So you would expect that there will still continue to be investors who continue to invest, will take advantage of this current yield. Considering other alternative asset classes which have significant risk.
Now, it seems there is increased demand, not just at the short and intermediate end of the curve, but also on the long maturities. Why is this so? Why are investors actually seems to shift attention, not just looking at the short end, but also at the long end?
Yeah, looking at pricing. So when you see increased activity at the shorter end, which moderates the yields, then the longer end of the curve becomes more attractive, which will now lead to a convergence of yields. So investors are just trying to spot opportunities, and the longer end of the curve also presents opportunities. You expect that before the end of the day, we should see some form of convergence in the yield within the shorter and longer and the long end of the curve.
So it seems that this development is actually attracting investors who would otherwise remain at the equities market and instead would take advantage of these high yields at the treasuries market.
Yes, we would expect there will be sustained interest in the fixed income market relative to the equities market, though we saw some form of rally that's close positive yesterday. But we feel this cannot be sustained because when you still look at fundamentals, it's still very, very challenging, still very worrisome. So investors will prefer to invest in the fixed income market where the risk is almost very, very limited.
So what is your expectation for today and for the rest of the week?
Yes, just early trading today with some markets already trading soft, losing about 2 bips, but that's still early in the day. Would expect that within the equities market will continue to trade very soft. Investors will not take very long position, while within the fixed income market we will continue to see renewed interest. Most customers will prefer, instead of investing in having term deposits, most will prefer in investing in fixed income securities with higher yields. So we'll continue to see a sustained improvement in terms of yields.
Thank you so much, Ayodeji Ebo, Senior Associate Investment Banking at Afrinvest.
Thanks for having me.
And on that note, we've come to the end of Business Morning. Thank you so much for being a part of the program. We hope to see you same time tomorrow. Meantime, you can send us a tweet and your comments on various Twitter handles at CTV Harriet, at Bibosin, at CTV_Bolaji A, at This Morning, and at Channels TV. We'll be glad to hear from you. See you next time. Bye-bye.